Funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board.
Soybeans are found on dinner tables around the world. Some form of the soybean is found in baby foods, snacks, cooking oils, and many other food items eaten daily. And soybeans provide the protein in the diets for livestock and fish. The Nebraska soybean farmers support research to develop new soy-based products for foods, livestock, and industrial uses through their checkoff dollars. The Nebraska Soybean Checkoff, growing opportunity from the ground up.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Luke Beckman analyzes corn and soybean markets. Ron Plain explains how margins have turned red for pig producers. Matt Spangler discusses bull selection, and Keith Glewen updates us on corn and soybean research results. Luke Beckman from Central Valley Ag is our grain market analyst this week. The USDA Tuesday released its February crop report. It lowered corn ending stocks by 50 million bushels and dropped soybean ending stocks by 25 million bushels. The agency made adjustments in South America, adding 1 million metric tons to Argentina and subtracting the same amount in Brazil. That takes Argentine production to 56 million metric tons and Brazil's output to 94.5 million. We talked with Luke Thursday morning and began by asking for some key takeaways from February's supply and demand numbers.
February WASD typically, Jeff, is not too exciting. I mean, you're coming off of having supply numbers finalized, so to speak, in January. We've got planting intentions coming up in March, so February is kind of that middle ground. Didn't expect much, really. It was demand revisions for corn and beans, and then really probably looking at South American production. In this report, we did see ethanol climb 75 million bushels, citing higher gasoline consumption from EIA data. Then we did pull back feed demand on the balance sheet by 25 million bushels, with distillers kind of displacing corn in the ration, which might be a little suspect based on conversations with some feeders in the area. But overall, we do tighten carryout on corn, 50 million bushels. Good to see those numbers safely under 2 billion, which was kind of our benchmark number for quite a while. Soybeans, you're going to see exports grow for the 4th month in a row. Since our October numbers came out, we've seen exports climb by 3% on the balance sheet. So carryout numbers coming down for beans too. We did see imports climb, which was a little bit of a head scratcher, and then we did see crush come up 15 million as well. So overall, corn and bean carryouts both shrinking a little bit in the February numbers.
Are those soybean exports hanging in here as Brazil gets ready to start shipping out its beans?
Really, they have been, and typically you get into that December time period, you start to talk about, well, the South American crop's coming, our export program's going to crash, and really it's been extended maybe a little longer than we thought. And if you look at crush margins, Jeff, down in South America, they're making money in the crush business down there. So as those beans come out of the field, a lot of those early beans are going to crush demand instead of into the export channels. You don't have the amount of ships down in the port facilities like you did a year ago, so maybe not quite as hungry for the South American beans, and you've seen U.S. export sales remain, for the most part, pretty strong. Seasonally, this is really from here forward where those start to slow down. But sales have been good. Shipments still been pretty aggressive.
Let's talk about ethanol. So as you mentioned, they increased its usage by 75 million bushels, corn usage. Is that surprising to you, or do you think that ethanol is still profitable, or at least could be profitable, and is an engine that can keep going?
Well, it's an industry that if you look at spot margins, you know, we buy the corn, we sell the ethanol, we sell the distillers, the numbers are negative today. Now, plants are going to be hedged differently depending on how they protect themselves, but overall you've seen local demand for corn start to dissipate a little bit. And that is because the ethanol industry is experiencing some tighter margins. So the number was surprising to see the USDA maybe be as aggressive as they were with that number, but we have been grinding at a pretty good clip during that first quarter, and I think that has set us up for a good year. And so if you look at what do we need to do each week to hit the new number, it's still possible. It's a number that we're grinding at today. We'll see kind of where the stocks go. The stocks numbers continue to grow. They're following crude oil stocks higher, which crude stocks are the highest they've been in quite some time. So,
what are some targets for maybe old crop corn and soybeans that you think a price level that could be attractive for some sales?
Sure. You're looking at some moving average resistance right in that 393, 392, which is kind of a double top just in the last couple weeks here. It's a level that we have not breached. So 392 if you need to get some stuff moving. Otherwise, we feel comfortable if you do have some stuff sold. Let's see a 4 on the board. One thing we really want to talk about on old crop corn right now specifically, though, is basis. What will basis do should corn climb to 4? Because that seems to be the magic number for a lot of people. So really talking about offsetting your basis risk and managing that, independently of what the Board of Trade's doing.
Soybeans?
Soybeans, they're a little bit tougher. Nobody has anything good to say about beans right now. But it is February, and we're trying to remind ourselves of that and stay a little bit patient. But I think if you could get a 10 in front of beans on the Board of Trade, that's a number that we probably need to let some more beans go at. And if they climb a little bit north of there, 10, 15, 10 and a quarter. But if it has a 10 in front, we'd like to take advantage.
Whether it's nationally or locally, what is your sense of what the planting acres will look like as we get ready for spring?
Early on, it was all about beans growing another 4 million acres up to 88. We had corn at 88. We felt like, corn was going to grow from there. That number feels too low. I think the U.S. producer is good at growing corn. They like it. And if you look at break-evens today with where new crop bean prices are at, it's kind of a tough play, at least, in our neck of the woods it is. So that ratio, it's the smallest it's been in a while at 2.3. I think that corn's going to steal some acres, and you're going to see a number closer to 89, 90. Beans fall to maybe 86, 87, somewhere in there.
Next week, Elaine Cubb will talk with us about corn and soybean markets. We also have a look at hog markets this week with University of Missouri Extension economist Ron Plain. The USDA this week estimated 2015 net farm income at $73.6 billion, down 32% from 2014. The agency sees slides in crop receipts of 8%. It's also forecasting a dip in livestock receipts of 5%. More pronounced, hog receipts are estimated to be down nearly 14%. That could be unsurprising if you've followed the free fall in hog markets in 2015. As you'll hear in a minute, one of the issues at play now is a work stoppage on the West Coast after a labor dispute. We spoke with Ron Thursday morning and began by talking about the large slide in market prices.
Hog prices dropping like a rock. We're around $40 per hundredweight live. Some prices in the upper 30s. On a carcass weight basis, around $57 per hundredweight. And these are the lowest hog prices since November of 2010.
What's the reason for the drop?
More hogs than we expected. Slaughter's been up 4 of the last 5 weeks. That's a bit more than we thought. Weights continue to be heavy, 4 to 5 pounds heavier than a year ago. And we've got some real problems on exports. The dollar's gotten real strong, and there's a slowdown on West Coast ports that's causing a real backup of product out there, and it's lots of things going the wrong way.
Explain to me how important that West Coast deal is.
It's a big deal. We export a little over 20% of the pork we produce in this country, and about half of it goes out the West Coast. A lot of it goes out as fresh chilled product, and if you can't move it quickly through there, then it has to be frozen. That reduces the value, and if you still can't get it out, it gets dumped back on the U.S. market. That gives us more pork here and lower prices for consumers, which is good, but also lower prices for cutout value and for hogs.
If it could get out, how's the strength of the dollar going to impact that?
Well, that's we've had about a 10%, 15% increase in the last 6 months or so in the value of the dollar. That makes our products more costly to foreigners. So even once we resolve the problem with the workers in the docks on the West Coast, we'll still have a lot of pork to work through, and exports may not bounce back real strong.
Exports were down last year, right? Do you assume that's the case again this year for 2015?
Yes, we were down almost 3% in pork exports last year. We think we're off a lot more than that here in the first quarter of 2015. But yes, we're probably going to export less pork this year than we did last year.
So back to the market itself, we've seen this downward trend and there's really been no support to be found. Does that surprise you?
Well, I mean, given the situation, no. Yes, hog slaughter is higher than we expected, higher than what we thought we'd have in January and February based upon the last inventory report. I'm looking for weights to back down a little bit more towards normal levels, but they continue to be very high. That's a bit surprising, and certainly I didn't see this problem on shipping it through the ports on the West Coast coming, so it's all a bit unexpected for me.
Do we dare ask how low it could go?
It's hard to see a floor under it anytime soon. What we really need is some sort of settlement to the work dispute, the labor dispute on the West Coast, so we can start moving product there. There's not a lot of alternative to going through those ports. And when you export such a large portion of your production, forcing that back on the market means that there's still plenty of downside risk in front of hog prices.
How has this affected margins for the producer, Ron?
We're back into red ink. We thought we'd be making money now. Last year was the most profitable year ever for hog producers, and we thought we'd have plenty of positive carryover, but we're underwater right now and probably not going to be back above in the next several weeks.
Is that a threat to expansion at all, or is that too early to say?
Well, we've got a lot of expansion going, it seems. USDA's December pig report predicted the winter farrowings, the number of sows, the farrow would be up about 4% compared to a year ago. That's driven by those very good profits last year. We expect more hogs this year. USDA is forecasting 5.5% more pork this year than last year.
With all that pork, what does it mean for the consumer?
Well, consumers are going to get a break. Not only more pork this year, but more chicken, more turkey. Retail prices were record high last year for most all the meats. We're going to see a little bit better prices in the grocery stores for consumers here in 2015.
Related to the discussion on slaughter weights, Ron says those weights have been higher than year-ago levels for 96 consecutive weeks. The February Nebraska farmer says Wineglass Ranch near Imperial has always been known for its range management and environmental stewardship practices. Now the ranch has added a guided hunting business. In this month's issue, you can read how Jeff Pribino and his son Logan started the business 11 years ago. Jeff says the ranch has an average of 100 to 150 people come each season, and hunters have arrived from every state in the country. He says the mix of irrigated and dryland fields, different crops, CRP corners, and productive rangeland gives southwest Nebraska the diversity that attracts game birds. You can read more about the business in the February Nebraska Farmer. Earlier this week, we talked with Nebraska Extension beef genetics specialist Matt Spangler about bull selection. Matt says while there is a lot of data available when it comes to purchasing bulls, it's important to know which information is useful. We started by asking Matt how to decide what kind of bull you need.
Yeah, it really comes down to what your breeding objectives are. And what I mean by that are how do you market your calves? What are your available feed and labor resources? And then do you intend to retain replacement heifers or not? All those things decide the list of traits that are important for you. For instance, if you sell calves at weaning and retain replacement heifers, obviously weaning weight is important. And maternal characteristics for the replacement heifers, be it optimal levels of milk, maternal calving ease, and trying to conserve mature weight. Of course, if you're going to breed the bull to heifers, calving ease is of concern. So clearly identifying what your goals are and your available feed resources really helps set the stage for what kind of traits you need to look at. And of course, knowing how your calves are performed historically gives you a picture of what you might need to improve.
What tools are out there to help you match those needs?
Yeah, that's a good question. You know, there's a lot of data that goes into bull sale catalogs, but I always tell people there's a difference between data and information. Some of it's really not that informative. And so what you really need to focus on, since we're selecting bulls to make genetic change, select on the tools that do that. And that really boils down to expected progeny differences, or EPDs. And then several breeds have what we call economic index values, a collection of EPDs multiplied by economic weight. So it really makes selecting for multiple traits at the same time extremely simple and puts it in an economic context. So I encourage producers to focus on those kinds of tools, and if they feel that some of those are missing, feel free to ask the seed stock supplier for them.
What other things should you be asking your seed stock supplier?
Well, in addition to those critical EPDs and economic index values, obviously they should have some knowledge of what the breed average is going into the sale. EPDs are only valuable as a comparison, so you have to know really what the average is. The other thing is bulls should pass a breeding soundness exam or a BSE within ideally 30 days or earlier prior to the sale, and so make sure that they've done that. Obviously that's just a snapshot, so if producers are going to turn out bulls late in the year, they might want to have another BSE just to protect themselves. Also inquiring about the health and management of the bulls is certainly fair game as well.
Why is that soundness exam so important?
Well, obviously we want to turn out bulls that are fertile, and so in breeding soundness exam, we generally make sure that scrotal circumference is of adequate size, that the bulls are able to fully extend and produce sperm that's of at least an adequate quality. And so we want to try to ensure that bulls are able to go out and actually settle cows.
As you mentioned, there's a lot of information available, or a lot of data at least available. Where can you go for more help to try and determine what you need and how to match it?
There's a few resources depending on the breed of bulls you want to use, looking at the respective breed association website to get a feel for some of the tools available within that respective breed, and also what the breed averages are for those EPDs and economic indices. We have a lot of information on the UNL Beef website as well, and that's beef.unl.edu, and so I would encourage producers to look at that, and we have a list of all available EPDs, their definitions, and those kinds of tools, so you can be an educated bull buyer.
As Matt mentioned, you can find more resources on this topic through the UNL Beef website. We'll also link to more information on the Market Journal homepage. For the past many summers, we've reported from Soybean Management Field Day locations across Nebraska. Even if you didn't attend one of the 4 sites for the 2014 event, you'll soon be able to see results from tests conducted there. In addition, you'll also be able to hear updates this week from grower-based trials in the Nebraska On-Farm Research Network. Nebraska Extension educator Keith Glewen recently joined us to discuss the events, starting with soon-to-be-released data from the 2014 Soybean Management Field Days.
We've been working with the Nebraska Soybean Board since 1999 and conducting these educational programs, usually in the month of August for soybean growers. And every year they're at a different farming operation. And approximately 3 years ago, we stepped back and said, we go to a lot of work putting out these demonstration plots, let's just do a little more work and conduct replicated research at these 4 sites. So we have engaged the university faculty, those being plant pathologists, entomologists, agronomists, and so forth, to conduct research at these sites, and we capture yields at the end of the growing season. And so this year, like we did last year, we've put together a book which has the research results, and it'll be going out in the month of March to 23,000 soybean growers across the state of Nebraska.
Give me some takeaways from the studies that you did, some of the bigger ones or some of the noteworthy ones.
Growers are challenged every year with marketing to adopt and implement new input practices, management practices. So we're looking at some of the real world things that I like to think of, such as the use of fungicides on seed, use of insecticides as seed treatments, using fertilizer early on in the growing season, looking at later applications of fertilizer, insecticides, and fungicides in the reproductive stages of growth, and then combining all those together. So we have, in one study, we have 240 plots at each site that are replicated, and so we're capturing a lot of data and trying to validate if these management practices are legitimate, or if there's certain situations where we need to use them. Another study that we've been looking at is nitrogen management in soybean production. Now that's usually not something you would think would be needed, but the industry in certain cases is promoting the use of nitrogen. And so our soil scientists, our nutrient management specialists have been looking at early season nitrogen applications, late season nitrogen applications. As you well know, water is important in Nebraska, and it's ag economy, so we've got some irrigation studies. And those can be challenging because sometimes Mother Nature doesn't cooperate. You don't want rain and it rains, and that messes up your study. But that's a good example. We're looking at these research topics, not just one growing season, but we're looking at them over multiple growing seasons and looking at them at multiple different farming operations and growing regions, so we can get an idea on some consistency of results.
Keith, as you're very aware, on last week's episode of Market Journal, we talked about the Nebraska On-Farm Research Network, and you have some events going on across the state, 2 more coming up this week. Tell me about that network and what producers will be able to learn about if they attend those 2 meetings this week.
Again, this is real world. Growers oftentimes have questions that they would like answered on their farming operation, because maybe that research facility that the university has is 150 miles away. Their soils are different. Their management practices are different. So we have growers, we have industry people that come to us and say, here's a topic we'd like to research on our farm. And so growers who attend, industry people are welcome to attend. There's no cost to attend, thanks to, in part to financial contributions from the Nebraska Corn Board, Nebraska Corn Growers Association, as well as Nebraska Soybean Board. And on Monday, February 16th, we'll have a session at Norfolk at the Lifelong Learning Center, and on the 17th at the Ag Research and Development Center near Meade. The program will be from 9 to 3. There's no cost to attend, but we'd sure like to have you call ahead so we can make sure we have sufficient food and printed materials for you to take home.
So I imagine there are a lot of farmers out there that are thinking this is interesting, it's an interesting project, but I don't know if it's for me. What's the biggest hurdle to getting someone involved?
Fear. A lot of growers think that it's going to take a lot of their time. When they think of research, they think of small plots. I just alluded to it, earlier. However, these studies involve field length strips using the grower's equipment. Usually it's 2 treatments, A versus B, something I haven't been doing versus my current method of growing corn or soybeans. And again, they use their own equipment, field length strips. It's just important they set it up right and harvest it correctly.
Keith says the Nebraska On-Farm Research meetings will include more than 75 studies from about 50 growers located from Box Butte County to the Missouri River. We'll link to more information about those meetings on the Market Journal website. Now with this week's weather forecast, here's Nebraska Extension State climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. During this last week, we had pretty much an uneventful week for precipitation. We did see some colder temperatures begin to move in as we got to the second half of the week, and that looks to be the trend as we go through these next couple of weeks. Much below normal temperatures on average, and we do have some cases where we'll see some snow fall within the region. It's just a matter of when will it happen and what the quantities will be. So let's get right to the forecast and see how we might see this week progress. We have this northwest flow aloft that's brought in this cool weather. We also have another system that's going to come down in this northwest flow and deep in this U.S. trough, and that's going to pull in much colder weather. So as we progress through today, we'll start to see clouds on the increase from north to south, and we'll also start to see the chance for flurry activity across extreme northeastern Nebraska as this upper level wave begins to approach most of the northern portion of Nebraska. Now as we go into tomorrow, we'll start to see that part of the energy moves over the western Great Lakes, and we see this another wave of energy moving down across the Rocky Mountains that will start to slide into our region. And this is expected to once again generate some precipitation across the western part of the state, particularly in the afternoon hours, and more so as we get into Monday. The big question is, where will the overall snowfall occur? And right now it's pointing toward the western half of the state with the best chances for significant accumulations. By significant, right now 2 to 4 inches. Eastern part of the state less than 2 inches. So here we go on Monday. The system drops down and another piece of energy moves through our region, but the cold air is going to be in place, and it looks like it's going to be very brutal temperatures. In fact, the coldest temperature will probably come somewhere in the midweek period, and we can see that as we get into Tuesday, the straight flow right from the Arctic Circle straight southward. We'll be looking at highs that are going to be at least 20 degrees below normal on Tuesday and Wednesday. Very difficult to reach the 20-degree mark in many locations across the state. As we get into Wednesday, we'll start to see some relief in terms of their cold polar plunge, but we have another reinforcing shot of energy that is bringing some of that moisture across eastern Nebraska. Now, a little bit uncertain as to where the exact placement of this snow field will be, but this doesn't look to be a big event. But just like a couple weeks ago, this same type of scenario set up, and we actually seen that wave move a little bit farther west and drop some fairly significant snowfall. The one thing about it with these cold temperatures, it isn't going to take a lot of moisture to get a couple inches. So we should pay attention that the conditions for Monday and also on Wednesday may change, and we actually see more significant moisture than is currently forecasted by the models. Now, as we get into Thursday, we'll start to see the ridge starting to move in, and we'll bring some warmer temperature to western Nebraska, and we'll get some slight relief in eastern Nebraska. But more importantly, as we get into Friday, we are going to start to see some milder Pacific air trying to work over the Rocky Mountains, and we'll get a down sloping component. So we should easily move it back up into the 50s across western Nebraska, and we'll probably be in the 40s across eastern Nebraska. But buyer beware. Look in the Pacific Northwest. Another system is expected to drop down rather rapidly for next weekend, and once again generate another week of very cold temperatures with several more opportunities for precipitation. So let's take a look at the temperature forecast. You can see that we're on a downswing all the way through the middle of the week before we start to increase our temperatures as we get toward the end of next week. As we look at the 8 to 14 day forecast from next Thursday to the following Tuesday, once again we get another cold polar plunge, and in terms of precipitation, with those storms coming in, a significant increase in moisture across the southern, central, and northern Rockies.
Thanks, Al. Today's interviews can be found on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, the 2015 outlook for hog prices, bull selection, and results from the 2014 Soybean Management Field Days. Next week, Elaine Cubb will be our grain market analyst, and Roger Elmore will discuss hail damage research in corn. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.